Welcome back to another episode of Policy News and Notes with Neil. So much is happening in the policy, political, and legal arena. Don't know even where to start. Oil hit a 4-year high today on continued concerns about the war in Iran and market jitters about possible escalation. We had an assassination attempt on the president at the White House Correspondents' Dinner, which really rattled political Washington. The redistricting wars ramped up to redraw maps ahead of the midterm elections, with Virginia adding seats for Democrats and Florida adding seats for Republicans potentially. And the Supreme Court really threw nuclear fuel on the redistricting battles with a decision narrowing significant portions of the 1965 Voting Rights Act. But in that background, I want to focus on something that is very industry specific today, and that was the introduction of the American Energy Dominance Act by Representative Brian Fitzpatrick of New York and my buddy Mike Carey of Ohio and a couple of others, Republicans who came together to introduce legislation to extend some of the clean energy tax incentives, including 48E, that were given a runway in last summer's One Big Beautiful Bill Act. These Republican congressmen argue that at this moment in time, when Americans are feeling the pain of high electricity prices, even though companies are working towards subsidy independence, investors crave long-term certainty. And now is not the time, the argument they're making, to end some of these tax incentives, and we ought to look at a further extension. Now, do I think the bill is going anywhere this Congress? I don't. However, it still has immediate value from a defensive perspective. Republicans are looking at moving another reconciliation bill to pay for immigration spending and security in Iran. They're not going to get a single Democrat vote for that package, so they're going to have to use that same process that was used last summer for OB3A. And that's going to require just about every Republican vote. And so these members signing on at this time to legislation actually wanting to extend these energy tax credits, while they're not likely to get inclusion of that language in the reconciliation process, at least should take energy tax credits off the table, minimizing any risk of further changes to the policy. And I think that has a lot of value. And then looking ahead to the future, well, I just mentioned the Supreme Court action that will have a significant effect on redistricting. I think that effect is likely to be felt more in 2028 and not the 2026 midterms. While the election is still several months away and it's a lifetime in politics, I do still think at this moment that Democrats look favored to take the House. And I think while there's been some exuberance from Senate Democrats, I think the map in the Senate still largely favors Republicans. But you could very likely be looking at divided government in 2027. And in that moment, in President Trump's final 2 years, I think with Republican support and significant Democrat support for extending some of these clean energy tax incentives, I sadly believe high electricity prices will still be an issue from 2027, 2028, 2029. And with that pressure, I'm hoping that it creates the parameters for a bipartisan deal to further extend some of these incentives. That's my hot take on today's episode of Policy News and Notes with Neil.